Hello, everyone, and thank you so much for joining us today for this week's market recap. My name is Greg Lewis. I'm the Director of Marketing for Metastock, coming at you from my basement, aka the temporary Metastock studio. I see we've already got some people logging in. As you're logging in, please go ahead and say hello and let us know where you're coming from and send out a big shout. Sorry. First rule of broadcasting is turn off the sound on your phone. Today's guest is Guy Cohen. Guy Cohen's from the UK. It's about, 10 o'clock there right now at night, as opposed to about 2:30 right here in North America. He just spoke with us yesterday in a webinar, which he entitled Trading Along Big Business. And it was very well received. And I'll go ahead, if you guys want to go back and see that, I'll go ahead and put a link in chat so you can find that. So a couple other things I want to discuss. We're going to be starting here in about 3 minutes and 45 seconds. Let me show you a few things here real quick. Okay, I mentioned in a previous webinar that right now we are running a deal with Metastock called the Metastock 2020 Spring Event. This was supposed to end at the end of May, but we've decided to run it through June by popular demand. I'd like to point out that you can get a lot of great deals, get to the right computer here, on both upgrading to Metastock 17 as well as buying or subscribing to Metastock if you have not yet done so. As well, you can get great deals on Metastock add-ons. The website to get there is metastock.com-ADMM420. Also, I wanted to point out that though they won't probably be discussing it today in yesterday's webinar, Guy and Hunter talked about a great offer you can get right now to get Guy Cohen's OVI Traders add-on as well as his private, become part of his private club. You see here you can get it for save $100 a month or $1,000 a year if you subscribe now. And if you don't yet have Metastock, you can subscribe for Metastock here too. The web address to get here, and I'll put it in the chat in a minute, is metastock.com/OVIAD. OVIAD. Okay, let's see how much longer we got before we start. Okay, we got about 2 minutes. Okay, like I say, as you're coming in, go ahead. I see more and more people actually coming in now. Go ahead and type us, say a big hello, and let us know where you're listening from or tuning in from today. Unlike other days, today's broadcast is only on YouTube. We do this weekly recap every week with a different presenter, a different guest. And we're excited about today because, of course, the markets went crazy today. And I'm really interested to see what Guy and Hunter have to say about that here in about 1 minute and 45 seconds. So, hello, Fad Al-Hathi. I'm sorry, I can't pronounce your name. But you are the first person to say hello, so congratulations. All right, we got about 1 minute and 30 seconds. One final thing, if you have any questions, go ahead and chat them in here on YouTube. Hunter and myself are both monitoring chat. If it says Metastock on the chat, that's coming from me, Greg Lewis. If it says Hunter, that's coming from Hunter Smith. Guy in the UK does not have direct access to chat, but Hunter's going to be monitoring us, so there's that. All right, I'm going to go ahead and mute myself here, give you about 1 minute to settle in while I make sure that our speakers are raring to go. Thank you again so much for tuning in, and I hope everyone's safe and sound and happy where you are, and successful trading.
Hello, everyone, and welcome to this week's Market Roundup. My name is Hunter Smith. Today is, oh Lord, it is June 5th already. Today I have a special guest. For those of you who were on our webinar last night, you'll know Mr. Guy Cohen. He'll be doing the roundup with us today. We have a ton of stocks to look at, and we're going to get straight into it. Hopefully everyone can see my screen just fine. Before we get into the meat and potatoes of what's going on with the market, I want to cover the legalities. This demonstration is designed to instruct you on using Metastock and accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for decisions based on the use of our software, any trading strategies, or information provided in conjunction with our company. So we are here today on June 5th with Mr. Guy Cohen. Guy, how are you this evening?
We got to stop meeting like this.
I know, right?
It's people are going to start talking. You know, I'm a married man. You know, come on, let's Friday night. You know, these cozy evenings together. I don't know.
Got a little glass of wine. I got a cup of coffee. You know?
I do have a glass of wine. You should see what I've been doing today. Yeah, I'm actually just anticipating my day tomorrow, which is a full day with 2 kids, one at 3 and 3 years old, and one at like 12 days old. So like the wine is just setting me up nicely for that.
Yeah, I bet. Hopefully, you know, we'll burn through this, let you get some good sleep tonight.
Yeah.
It's been kind of an interesting week in the market here. Just to kind of give you everyone in the audience kind of an overview. I'm going to pull up a few charts, some of which we'll probably end up taking a look at a little bit more in depth. I will be using Guy's system, the OVI system, for the majority of this presentation. Actually, give me just a second. We'll do this one at a time. It's been a really interesting day in the market today. We had a large gap up, and market kind of ran, which was, I guess it makes sense with the week that we've had so far. But what do you think about that, Guy? Why do we have such a strong day in the Dow today?
Well, look, if you look at it from what we were saying yesterday, if you look at the by the way, I just had a very good time with you guys yesterday. So for anyone who's here that didn't see that, we had a great time yesterday. We went through a good hour or so together. And I was just showing you guys what we do and how we implant that cooperating with Metastock. So we had a great session yesterday. So if you do get the chance to review that, do. And the reason being, because Hunter and I were sort of smiling about it earlier, is that just virtually every stock I went through yesterday that was setting up has gone up today. Now, of course, it's easy to go, you know, to look good when the market's bullish. But what we were saying yesterday is that every indication suggested that the market was bullish, and therefore that was the way to go. Now, compare that with people going on saying, oh, the market's going to crash and this and that, and putting their opinions on. Whereas what we do is we just look at the signals. And what we were talking about yesterday is all about where is big money lining up. That's the entire, that's exactly what my strategy is. That's all I look for. I look for specific markers for where big money is lining up. And across the whole market, we could see it was lining up bullishly, and that's what we went through yesterday through the 1 or 2 indicators that are proprietary to me and 1 or 2 that aren't. But the ones that are the proprietary to me, and now that Metastock has them as well, are indicators you just can't see anywhere else. And so Hunter's going to show you that tonight. And boy, we had a great day. Really the most difficult thing really was picking which ones to go for. But when you go through, I don't know, 40, 50 stocks, and literally 90% of them have gone up today, That's pretty good. That's pretty good. And the other ones are just consolidating in any case. So why has it done it? Well, dollar's sliding, so that's adding juice to the market, making the dollar a little cheaper, so more money's pouring into the markets. And there is potentially a bit of delusion going on, but that doesn't matter to us. If you have the right trading plan, make money from the delusion. It's okay if the market is deluded going up, go up with it. Okay, you just don't have to be deluded. You're just following where the money's going. At some point, the game of musical chairs will be over, and if you have the right trading plan, then you'll be able to exit in an orderly fashion, keeping profits, and then if there is going to be a big ride down, then you can obviously flip the trading plan around and do exactly the same in reverse. That's all we do. And the thing that we were talking about yesterday is that, think about being a specialist. You can do that with the tools that Metastock have, particularly if you have our plugin as well, because being a specialist, if you look at every walk of life, the biggest money made on a per hour basis, or the more money that is made is done by specialists. And as much as the Metastock have incredible variety of tools, if you can focus that power that they have on a couple of indicators and not make it, look at Hunter's chart, by the way. Isn't that nice and clean? That's what you want to be looking at. That's the kind of clean chart that actually is far more useful than 100 indicators on. It's just a question of which indicators you choose to go with. But yes, you've had the dollar sliding a little bit, making things a bit cheaper, and this other situation. So what we saw yesterday was a bunch of stocks lining up in a very constructive way. If you've followed anything of mine, you can go back into my archives and see what I've been saying over the last many weeks, and you'll see that we've been all over this in a bullish way. And I'm going to show you some of the stocks we've either been on or that are shaping up right now. And so we'll kind of be doing what we did last night, Hunter, with a few extras. But really, when I look back at when I started, the tools that you guys have access to via Metastock, really, I wish I had those tools when I started out. So you really have a massive advantage if you've got all this stuff.
We try, and in all honesty, I try to keep my chart very, very simple. I have a couple of, for those of you watching right now, I have a moving average on, and I have volume, basically, and that's pretty good. The moving average is a 200 period moving average, which I think is kind of, there are not many things that are really accepted across the industry as something that is a major technical indicator, but I think that the 200 period moving average can be widely accepted as a really, really good signal of what direction the stock is going, especially if we look here on the Dow. If we go back in the past, Dow's hovered around and used the 200 period moving average as its support and resistance multiple times. We're back here in August of 2019. We bounced off the 200 a few times. We had this rally, bounced off the 200 again. And just recently, with the market crash, even with that crash, we dipped down, we came back to the 200 and tested that level, and then the bottom dropped out. Well, if you notice where we're at today we just barely broke above that 200 period moving average after 2 days of kind of hanging out right at that level. And I think that that's really indicative of the move that we're on right now. And like you said, Guy, that there might be delusion in the market, but as always, there are going to be bullish opportunities and bearish opportunities. And as long as you're reading the signals and understanding what the market is doing, not necessarily having to know why the market's doing it, but knowing what the market is doing, I think that that's going to be a big key, especially in this type of crazy atmosphere that we have with the market. So we're going to be doing something similar. Like I said, the webinar we did last night actually links in the YouTube, so check that out. We're going to be doing very, very similar. Like I said, we're going to be cranking through a bunch of stocks here. So let's go ahead, get started, shall we?
Well, let's. By the way, I just want to say something to that.
Yeah.
If the market is delusional, and it may well be, doesn't matter. You don't have to be a soothsayer. As a you don't have to predict the markets. You and me and Hunter and anyone individually that we know, even if your account is in the millions of dollars, you're small potatoes. And you have the ability to get in and out very easily. Whereas big institutions with multi-billion-dollar portfolios, they have to somewhat forecast what's going on. Okay, they can't be as reactionary. They have to try and predict a little more. But you don't have to. All you have to do is read what is going on right now and prepare for what may go on moving forward. So what I'll do tonight is I'll show you a bunch of things. Presumably you're going to show the OVI signal in your charts, Hunter, today.
I will be, yes. Yeah. So
that gives me the ability to tell you show you what's going on. And this is what I say, don't be a soothsayer. You can certainly anticipate a move because of what you're seeing. We have this expression, and it's not unique to me, but it's one that I certainly have latched onto. It's trade what you see. Now, what we see is this indicator, the OVI. You can see the histogram there in blue and red. We see the OVI. We see what leveraged investors are doing. That's what it is. And we have other markers that could tell us in terms of volume and maybe the 200-day moving average and maybe a reaction at earnings as to whether big money is either already lined up, already invested, or likely to be about to. And then what we're looking for is a situation where selling volume has pretty much dried up. We've maybe got a consolidation to wrap a trading plan around, and that gives us the low risk entry and the low risk trade management. And if you look at the markets like that and you get good at that one game, that's how we have people 10xing their accounts in 18 months without even compounding their account. That would have been a 30x, and doing extraordinary things. So I would urge you to look, just look at what we're doing today. I'm going to show you a bunch of stocks and urge you to consider specializing. But there's one other thing I want to say, and that is this, that everyone in the world and their uncle has access to the 200-day moving average. Now, it's still useful, but it's not going to give you the biggest edge in the world because everyone's got it. Everyone's got access to volume. Again, useful, but everyone's got it. So guess what? Your edge is somewhat diluted in that respect. Everyone's got access to what happened at earnings. Really useful, seriously useful. You'll see in this presentation. But again, everyone's got access to it. So slightly less diluted, slightly more diluted in terms of its value. But no one else, apart from a very small select group of people who are either members of Metastock, and not all of the members of Metastock, but some members of Metastock and some of my members have access to this thing that you see as the first indicator underneath the price chart, the OVI. And that's what it's showing you is the behavior and sentiment of options traders. It's showing you the indicator is showing you a combination of volume, open interest, and implied volatility, all mixed into or baked into this beautiful little cake that is empirically proven and is running multiples of millions of dollars for fund managers in the US right now on behalf of their clients. So this is one of the only indicators that is actually empirically tested that you'll ever see in that. And because so few people have it, and because it is empirically tested, it gives a tremendous advantage. Again, empirically proven, tremendous advantage. So if you wrap all that up into the kind of things I'm going to talk about tonight, using the Metastock platform, you are in for a really fun and much easier and straightforward trading career that you can take into any age that you want to take into. So without further ado, here's what we're looking at. Now, I believe that is ADV, isn't it? But do you want to start off with the DIA, and then we'll crack on that way. Let's just go through the indices first, and we're going to whiz through. So I'm going to make Hunter, pant for breath here. Because I'm going to go really quickly because I don't want to hold you guys up. It's a Friday night, and I want you guys to enjoy. But let's look at the DIA. He'll pop that up. He'll maximize that chart. And what you see here is look at the middle indicator. You see decent action in the OVI. Most of the last couple of months has been blue. If you go back, I mean, marginally blue, I'm going to say, is from late April onwards, so last month or so, marginally blue, but not an awful lot of red beyond the big screw up that happened in February, March. Since then, it's been neutral to blue-ish with the odd little dip into the red. And now we're punching through that 200-day moving average. The way to play this is if the OVI remains blue, if it remains like that, or at least neutral, the way to play it is see if there's going to be some kind of consolidation in this. And you're going to see this so many times with so many stocks. What you actually see in your chart is reverse head and shoulders over a several month period. You're seeing an uptrend, you're seeing a punch through, or you're seeing a recent bull flag, 2 of them actually in May, 2 bull flags in May, and then a punch through of the 200 and another consolidation is what I would look for if I wasn't already long in that. So this is it's a serious punch through. This is a very decisive looking situation. Then go to SPY. Go and look at that one. Hopefully that's easy enough. Yeah, you can just overlay it, just do it over this one. That's right. That's a good one. So there's SPY. Oh, something going on there. That's not. And what you're going to see,
put on, so we're just going to switch
okay.
up for you.
Yeah, if you just use the same template, that'd be great. But what you're going to see here is something quite similar, except for the SPY went through before. Now, the SPY is a broader index than the DIA. Obviously, it's dominated by the FANG stocks, but OVI has been a little neutral on this one. But again, not much negative since the lows that happened in late March. So you see it's been not spectacular, but at least it's correlated somewhat. If you see the 200-day moving average, you'll see that literally last week it popped through it. Yeah, okay, there you go. So you see it there, and again, it's actually consolidated just above that 200. We love that, and then it's popped through. Now go Qs. Qs went through ages ago. It's almost like it is actually at its all-time highs. You'll see a more decisive OVI. You'll see again the punch through, the consolidations, the good OVI signals, and the breakout from flags above the 200. This is all good stuff. And you'll see that loads of technology stocks have done this. So again, all I'm going to do is repeat pretty much the same old thing. Now, I do trade other setups which are comparable and compatible, but what I do is I do them, this is the bread and butter, which has got a heck of a lot of jam and icing on top too. So here you go. You see what's happened. And look at all those consolidations. 1, 2, 3, 4 consolidations above that 200 with a predominantly positive OVI. And you can see the 5-day moving average of the OVI on that second indicator. So let's move on to the IWM now.
Before we move on this, because I know we'll probably get a question about it. Do you worry that a stock like this is too overbought? Do you think this
Extended.
is the...
Yeah, I mean, you see, that's why I only get in on consolidations. So for me, it's not overextended, it's just profitable. If you look at the flags in here, you'll have got in on one of those flags anyway, or one of those bounces. What it's been doing is actually bouncing off a 20-day moving average. So one of those bounces would do as well. I only look at 3 moving averages, predominantly the 200, and once in a while I'll see what's it bouncing off. Is it either the 50 or the 20? I will not go lower than that, and even the 20 is very marginal for me. But if you go and look at a chart of the Qs, you'll see how many times it bounces off that 20. It's a lot when it's on an uptrend. It did it, right up to February, and it's now doing it again from April onwards today. So just have a look. You'll see these setups, these patterns pretty easily, and you only need to glance at them. You don't need to obsess over them, and you certainly don't need to be doing every other moving average, because then look at how many bounces there are off there. It's pretty good, isn't it?
Very, very good.
So again, you see that, and then I take it off the chart. I have a way of just looking at that really quickly. So let's just have a quick look at gold, and then we'll move on to stocks alphabetically, and then it becomes easy. So GLD is a good one to just have a quick poke around at, just see what's going on here. One would normally think that gold would be struggling with an equity market that's going up, but it's actually held its ground rather well. And it's literally right bouncing off its 50-day moving average right now. So that's kind of interesting in of itself. So that's pretty cool. There we go. If you did a 50, you could see that it would be literally just hugging it right now, bouncing off it. If we go and look at, I'm just going to look at the live chart as well. It's actually gone down today, so it's actually gone down through its 50 today, as you can see. So gold obviously suffering as the equity markets go up. It's typically an inverse relationship there. So now we can have a quick poke around at silver as well. Silver's been on a tear, but obviously today, not so much. And silver's literally going to be almost touching its 200-day moving average there as well. So that just gets rid of the indices and the main metals, just to sort of see where we're at. Now, nothing much to say about that. Silver has been looking good, but now it's got a challenge. The challenge that silver has is you see how well the OVI has responded. And that little breakout from mid 16 to 17 was there, but now it's got a little challenge. It's going to hit that 200 or be very close to it, and then we'll see. But let's now move on to the alphabetical one. So AAP is the stock I want to do. This is Advanced Auto Parts, AAP. Now I bring this up because I mentioned it last night as consolidating above its 200-day moving average. As you'll see, the OVI is constructive. There was also there's two things about this. There's several things I like about this chart, and I mentioned it last night, and I want you to take notes and just to see things through the prism of my world here. You'll see that it's bumped up today. No surprises there. We talked about this yesterday. So Hunter has the list. You can go and look at the webinar from last night. And I said, I like this because it's consolidating around the 200. I typically like it to consolidate a little bit above the 200. But look at the OVI. That's constructive. That's hidden money you're seeing there. Hidden money that no one else can see out of the metastock or OVI environment. What you also see, if you go back to May the 19th, is a gap up at earnings. This is very powerful, and it's gapping up right into that 200-day moving average. So a move above that 200-day moving average, lots of closes above it, then sets the scene for another rise. We've had that. The only slight issue we've got is that it seems to be it has closed nearer its low than its high. So we'll have to see how that fares. But the fact that it went up today is no surprise. The next one is ACHC. And again, I have no apologies. I'm just going to say the same kind of stuff all the time. And by the way, when you go, well, hang on, how come you're finding all these things? Well, really easily, because all I look for. It's what I do every single day. And you'll see a similar situation here. Consolidates above the 200, constructive OVI, and a push above that. Again, it gapped up, and it's closed near the low, which is slight cause for concern. But again, we mentioned that, and there it was. Look at ACN. ACN is next. This is the stock here is called Accenture, obviously a very prime kind of stock. What that's doing today, again, constructive OVI. Look at what it's been doing. Earnings is actually on the 25th of June. Mark that down. Earnings on the 25th of June, and it consolidated right above that 200. Look at it. It consolidated, and as that happened, OVI kicked into gear, and then we had the push up. Easy profits there is exactly what we look for. Okay, so really nice looking stuff. And again, look at the hidden money. That OVI is saying hidden money. Next one is ADT. This has been a beauty. Another one, I mentioned this a couple of weekends ago, but look at it. Just look how beautiful that is. There's the consolidation above the 200. There is also the OVI looking really, really strong. It doesn't get an awful lot better. And then look at the push up from there. And it's still going strong today. So
would you consider this last movement, the last, pardon me, 4 days, would you consider it another kind of consolidation move?
Oh, yes, absolutely. Absolutely. I mean, it did a 3-bar consolidation, and now it's broken out through that too. And this was so easy. I mean, this was good. The only difficulty you had is the bar on the beginning of the month, on the 1st of June. It gapped up. It came down to potentially to pick you up. It just depends on how aggressive you are. Now, it hit a low of 730 on the day. Your previous high in that consolidation, that was 721. So it's just a question of how tight you made your limit. I know many people who missed out by a couple of cents, literally by 2 cents on that one. They just got really unlucky on that one. But you know, all that aside, the execution piece aside, look at the setup. It's beautiful. You've got 2 of them actually. You've got one right below. Actually, it's really interesting. Actually, your 200 is slightly different to my 200 day moving average. That's really funny. Yeah, I don't know whether you're.
Is it simple?
Yeah, I'm very, very simple. But your one is slightly different to mine. It's really interesting. Your one's better. Your one, I like yours better than mine on this chart. I would have been in there earlier. So there you go. But you know, it's really weird because you go through different charting packages and you see these differences. Anyway, let's move on to AMCR now. So AMCR. I hope you're enjoying this because what I really want to what I really want to get through to you is just this wonderful setup, which you can do bullish and bearish, and just make that your speciality. And you will just really be so happy with trading. It becomes so much easier then.
And one of the things I noticed on the last chart, ADT, and you say you can use it bullish and bearish. Look how the bearish signal's caught right here. You had this consolidation. You dip through. You consolidate it again. Dip back down. Yeah. You have a lot of bearish influence here. Sideways movement and then the dip down. So that's just a good example of
absolutely.
Of how...
Pull up IWM again. Pull up the Russell 200, and again you'll see this over and over again, both directions. But you pull up IWM, and you'll see it's and you'll just IWM.
Mm-hmm.
Yeah, there you go. And you'll just see just the beauty of it. It's really very, very nice. And again, and I wanted to just say a couple of words about what we talked about last night as well, because it's very important you understand that a pattern really doesn't mean anything unless there is you can explain something going on behind it. So if you think about magical numbers, I know that some of you guys will probably swear by them, but I don't believe in them. I'm not that kind of guy. I need to know what the evidence is behind what I'm looking at. And if you look to any quantitative analyst, they will ask you the same thing. But if you go IWM Russell, what you should see, and I think your OVI looks slightly different to mine, weirdly enough. But if I look at IWM, I see a big bank of red when it pushes through. So that's really interesting. Are you sure you've got IWM? No, you've got IWN there. It's India, Wagamama Mama. Okay.
Oh.
India Whiskey Mama. Motel. India Whiskey Motel. Oh, what's M?
It's Motel.
There you go. Look at that. Now, if you have the 200-day moving average in there as well, let's get that in there. And you will see a thing of absolute beauty. Now, look at this. If you make the chart bigger, Hunter, just fill that screen. Now, look at that. It punches through the 200, near the end of February. It then forms a consolidation under the 200. Look at the OVI. Look at it. It's gone bananas to the downside. People are selling the whatever's out of that. Okay, there's your breakdown. Your breakdown happens beautifully on the 6th of March. There's your short and all the way down. So
you're escalating volume too.
Well, you've got that too. So the volume bars that make sense, that really, really start to make this interesting, are the ones that happen on the 24th, the 25th, the 26th, the 27th, and the 28th. So those 5 bars are all larger than anything that's gone before them in the last few days. This is big volume, and you've got then the beauty of then the fulfillment of that bear flag. So you see it happening in both directions, and it's when you see it happening in an obvious way, that's when you go for it. So the next one we're going to look at here is let's just make sure we saw AMCR, which is Amcorp. And again, nearly every one of the stocks I'm showing you tonight is this.
There we go. Perfect.
Yeah. There's Amcorp, and again, you know, if it gets a little monotonous, good, because I'm going to get you to specialize. Going to get you to, this is the way you're going to beat the markets. Now that one's done nicely. It's gone up again today, so it's not really consolidating for us. It's just running away at this point. But again, see how beautiful that is, and see the big volume spike that you got, you know, on the 29th of May.
Mm-hmm.
So if it consolidates again, this is something that could be interesting for us.
So,
AMRX.
a question for you on Amcor. Does it change the fact that you have a little bit less history on this stock?
It doesn't. It does, but sometimes with less history, you have more propensity for growth as well. You know, stock that's not been around as long can sometimes be, you know, a superstar. You know, it's got a very big market cap though, and it's got a 17 billion market cap. It's no, you know, this is no small thing. Consumer defensive sector. Yeah, I'd have to know a little bit more about that particular stock. I don't know much about it, to be honest. So the next one is AMRX. I mean, I'm just giving you a bunch of setups. So obviously, then you pick through them. Now, AMRX is very interesting. Again, it was in there last night, and let's have a look. Why? Lots of blue OVI. You had the push up at earnings. So look at that. You've got the gap up at earnings on May the 11th. That's really important. So just go back. You can see as it punched through the 200, Hunter, that is earnings there. It's okay. You don't need to. There you go. Oh, no. Go make it bigger again. Yeah. There you go. And again. Okay. So there you go. That's the gap up there. That's the gap up. You're on it. So the next day was the gap up. Okay. That's earnings. Look at the volume spike happening there. That's demand. Then it consolidates once, pops up, consolidates again. And now it's looking good. It's looking good for another shoot. So that's that one. ANGI is next. So Alpha November Golf India.
Angie's List.
And what I want to just emphasize here is just, again, look at what happened. Punches through the 200, and obviously earnings was that. So that big green bar that punches through with big volume, that was earnings. So now you see the demand. You see the consolidation 3 times. You have a 3-bar consolidation right after earnings. You have another 3-bar consolidation shortly after, and then you have another multiple consolidation after that. And just look at the action. It's beautiful. This is just beautiful behavior. And this is money pouring into the options and pouring into the stock at the same time. And all you're doing is you're hitching a ride of people who have better research and better knowledge and more R&D dollars than we do. And that's all we're looking to do. And if you just do this, it's really, you're going to find trading a cinch. And it's really interesting because so many people want to complicate things. And by the way, if you are an options trader, you can do a couple of things here. You can be doing deep in the monies, which are usually good. But if you don't get the liquidity, you might want to try something like a synthetic, or you can even, you know, sell, you know, bull put spreads or something like that as well. So there's different things one can do in order to take advantage of the same setup. So Apollo Global Management is APO. That's the next one. Let's just see what's going on there. What I like about that one is it recently, on the 29th of May, we had a big volume spike, huge volume spike, within the context of a consolidation, within the context of a recent penetration of that 200-day moving average. So you see we've got, and also you see volume just come off after that volume spike. So the volume spike and the 200-day moving average and the OVI is indicating that there's some activity here by big players. And it just beautifully sets up into a consolidation that gives us a low risk entry situation when it pops out of that consolidation on June the 2nd. So again, it's just one of our many setups, and it's up again today. The next one is bull. Sorry, go on.
Sorry, just to interject for a second, just to answer a couple of questions that are coming through on YouTube. What is the indicator? The indicator, Jacob, is the OVI as well as a 200-period simple moving average. And then the next question, is there a set number of stocks that the software tracks? Metastock, we actually have access to all instruments worldwide. The OVI works on all US optionable stocks.
Yeah, which, by the way, it is plenty. And if you just wanted to say S&P 500, that would still be plenty. So the next one is Bull Corp. I have really enjoyed Bull Corp over the last couple of years. It does good things. Today, it's beginning to consolidate. So we've got that breakthrough. We haven't had a consolidation, but we do have a constructive OVI. So one has the eyes here that there is some big investor movement using leverage with this stock. So we need a couple of days for this to consolidate some more. Okay, so that one is one to leave cooking for a little while. The next one is Caterpillar. Now, Caterpillar has jumped up today through that 200. It just penetrated it yesterday. It is now gapped up. Big look at now. By the way, if you want to see the power of OVI right now, look at what preceded this gap up. Lots nice big OVI bars in the blue, which come after a whole bunch of red bars. So you can see a change in sentiment there. You can see it. It's clear as day. So from about May the 27th, May the 26th and 27th onwards, there is a big change in sentiment for Caterpillar. The leverage players are piling in. Now they've piled in. The price then responds. What we're now looking to see is some kind of consolidation for another entry. So you see it plain as day. The OVI people, the options traders were ahead of the markets in this situation. Let's move on to Cisco, CSCO. And Cisco has already made its move. We were all over Cisco a little while ago. It consolidated right above that 200. It popped literally, and now it's consolidating and has popped a little bit. It's just starting to move up again. So again, you see, look at all that blue constructive behavior over the last 2 months, which came right after that big red block of OVI, obviously with the COVID mess. The next one is CVET. And CVET is Covetrus Inc. I don't know much about it, but I tell you what, look at that. Isn't that nice? Consolidations and penetrations, OVI. I mean, it's all there, isn't it? And it's still
I like
going.
to see how early this comes in. This is incredible how early these blue bars come in.
Yeah, I mean, this is insane. I mean, I know you guys cover a lot of things at Metastock, but this stuff is running fund managers right now. Just so you know how powerful this is. This is an empirically proven thing. This sort of thing is never available to home-based investors, but it is to a few, which is pretty cool. And by the way, the great thing about this is that we went through these last night with you guys, so that it's fun to see them all pushing up. The next one is CVS. Obviously, CVS Health, you know that, the pharmaceutical things. That's punched up today, as you can see. Again, the consolidation above that 200 with a constructive OVI. The thing that makes it super duper higher probability is the OVI, because that's the thing no one can see. That's the thing that's been tested. In fact, it's an interesting thing, actually. We did a lot of tests. The 200-day moving average from an empirical basis doesn't really work very well. So it's very interesting that most technical indicators fail in terms of their empirical research. Now, it's not to say that you can't use them necessarily from a discretionary point of view, but if you were to systematize them, they wouldn't work. So typically, we're looking at a few factors when we're doing the discretionary thing. But I personally, from a mathematical background, want to know that even the discretionary things I'm doing have an advantage. For me, that is super important. So this is why this then becomes really important, because I have a logic here that tells me what is going on in this. It's not just a pattern. I can explain the behavior of buyers and sellers and options traders. And I can see, I can explain it. And when you can explain a setup, then it becomes not just a pretty pattern, but something that you can actually understand behaviors of buyers and sellers, and then say, right, well, I want to follow the ones who are important. Because the truth is that actually a lot of stuff in the markets is just noise. And it's people like us. I say like us, I don't mean it in a derogatory way, but we're not that important in the markets. But the bigger people with bigger research budgets, they're important. I want to follow them. I want to pinpoint what they're doing. That's who I want to follow. Does that make sense? Just give Hunter a wave if that makes sense.
Yeah, and if you're on, well, everyone's on YouTube at this point. Give me a wave. Give me a, hey, this is amazing. Give me a thumbs up. Give me some emojis.
Emojis.
Throw some emojis in there. And every book that you read, there's a million of these sayings like befriend the trend and rising tide raises all boats, etc. It's exactly what we're doing with the OVI. It's just we're taking it up a level. We're
only looking at the boats that are owned by the. We're looking at the yachts. We don't care about the little boats. Okay,
right.
We're looking at the super yachts. Well, because ultimately, I really don't care what Bob Jones in Arkansas. And by the way, if there is a Bob Jones in Arkansas on this event, don't take it personally. I just made that up. But let's call him John Doe. I don't care what John and Jane Doe are doing. With their 20, 30, 40, or a couple of hundred shares. What I'm interested in is who's putting big risk on the line, having a massive research budget. That's what I want to know. And that's why I focus on those blue or red bars there in the middle indicator. Let's look at, so CVS has popped today, but let's move on to the next one now, which is Caesars, obviously the Las Vegas, CZR, as you guys would call it. I would call it CZR. And again, you see the same thing. I'm not going to spend too much time on this. You see exactly what's going on here. If this becomes a little bit like, I've seen this lots of times tonight already, good. That's what I want. If I'm getting you there, then that's good. Next one is DISH. Because look how well these guys are done. Go and look at what we talked about last night and look what's happened today. And I realize the whole market's gone up as well. Dish, same kind of thing, consolidated at the 200. I'm going to move on from that one. You need to now have another consolidation here. The reason I'm mentioning these ones that have penetrated the 200 and are not consolidating now is because that's what we're now looking for, another consolidation above the 200 and another push up from there. Globus Med, GMed, I want you to look at this one. I think this one's interesting. I think it has a good story, and it started to move with some momentum today. So this was drifting off, but also volume was off as well. Look, you have the big volume spike on the 21st of May. Great. Lots of OVI. Look at all that OVI before the big move up. Look at it. Then you get the volume spike after it. Okay, that is on the 21st of May. Okay, so that's going to push you above the 200. But the OVI was there way before that. But that's good. You don't have to be there with it. You can just be monitoring, going, okay, there seems to be some interesting activity here. Now it's been consolidating. Yesterday was a bit of a fake bar to get everyone out. And then today we have what we call a sort of a semi-engulfing bar, or what I call a momentum initiator bar. Okay, and I think that unless the market, wets its bed on Monday, I think you'll see that GMed will start to climb.
So as a question on GMed, where is your entry point? Are you in it right now, or
you might not have one right now? I mean, it's a tough one. What I like to see is a rise off the high. You've actually raised a really good point. What I'm seeing here is something where the momentum has started to shift again in an upward direction. So now we've got something. Now you could make it. You could legitimately make it above the 3rd of June high, which we're just almost there, or just say, look, we're going to do it above either the 22nd or the 26th of May, right at the top of that flag. You could say that the gap up on the 26th of May isn't real. We did the same thing with Hologic. We'll come to Hologic in a minute. But the 22nd of May high would be acceptable from my point of view. So we're around there. This is a tricky one. I will admit that that's a tricky one, but it's got a story, GMED, and you definitely want to be looking at good entry points for that one. The next one is Goldman Sachs, but again, another great example of following big money. Goldman Sachs is now up and away above the 200. Just now wait for a consolidation. It's a tricky one, the financial sector. There may be better ones out there for that. Hasbro Toys is next, HAS. So this is Hasbro. It's below the 200, but it seems to be on the move. And I'd just say, just keep it on a watch list. It could be up on the move. Coming into the sort of season, we're now kind of past all the Christmas stuff, but now we're going into the next Christmas season. And that's the typically interesting time for toys. Now, Home Depot and Lowe's is what I want to cover next. So Home Depot has been, on and off our lists for years and years, behaves super well. Institutions love it, hedge funds love it. And we were on it as it broke out from that 200 back at the beginning of May. And you see what's happened to it since. You see it's had another consolidation literally yesterday. We mentioned this one yesterday, Hunter, and it's broken out. It's starting to break out right now. Lots of volume on earnings on May the 15th. So again, there's been some buying activity pouring into the stock, both in the stock underlying itself and also in the options. So it seems to have some juice here. If you guys are anything like us, there's been loads of home improvements going on during the lockdown period. Now we're coming into summer. That's another great time for home improvements. Might be a good time on that one. The next one is Hologic, HOLX. And now this one also had some interesting an interesting sort of entry situation. Now you'll look at earnings. Let me just pick that stock up. You'll look at earnings here on the 29th, that big green bar there at the way back. There you go. You got it with the big volume spike. That was great. But what I decided to do on this one was kind of interesting. I said, look, guys, once it came back down to the 200, I said, look, forget that big bar. It happened and the volume happened, but I'm going to take my breakout being just above 50 on that one in that tight consolidation, excluding that big bar on April the 30th. So just around 50, that was the breakout. And it went out, and now it's been consolidating still further and just hanging in there above that 200. So it's kind of interesting to see what would happen next. This is a protracted consolidation can often be very, very constructive. But also frustrating in this particular instance. The next one is Info, and this stock actually has a name of IHS Market. So Market actually is a very well respected sort of market analysis situation. And all I'm going to say here is it's broken the 200. It's keeping on going. Wait to see if it can consolidate again. I was hoping yesterday, Hunter, that it would consolidate for another bar. It didn't. It's popped up. So we just need to be patient, wait for a consolidation there. The next one is Dr. Pepper, KDP. That's Keurig Dr. Pepper. This one looking a little bit shaky right now. It's closed nearer the lows of today. It has gone up, but it's closed nearer the lows. But it was looking pretty nice. But the volume's gone up. It's going to be a bumpy ride, that one. But again, a long consolidation.
So with it, and pardon me for interrupting, but you have the last 3 days you have had kind of bearish candles. I mean, they've gone up a little bit, but I mean, we're really closing pretty close to the open. Do you wait for a bar that seems a little bit more sure of itself? I guess I could say
it's tricky. I mean, unfortunately, there are times where you just don't get the rub of the green on these things. This one is drifting upwards. It's closing nearer the lows pretty much in the last 4 bars now. So that's a little frustrating in that respect. The markers are there for decent money coming into it. It is holding above that 200, but it's a little nerve-wracking, and we can't get them all right. So as a setup, we're looking at these closes nearer the lows or in the lower half of the candle. And we're going, you know what? You're making me a little nervous, Dr. Pepper. There may be better ones to go for, but if you're in already, just have your stop. You've got to take. Trading's all about risk taking in varying degrees. Our risk that we take is pretty low, and you might have your stop bit below that 200-day moving average. Give it a bit of room to maneuver. It seems to be holding up well. I mean, don't forget you've had now 1, 2, 3, 4, 5, 7 closes above the 200, but we really need now a bigger move.
I think the key sentence there is there are better ones out there.
There are better ones out there. There are. I'm just showing you the same kind of thing. Now, L Brands had a torrid time, is now back above the 200. You need that to consolidate. So that needs time, another at least 2 bars to consolidate, and then we will be able to see on that one. But again, part of what I do is I'm looking for things as they set up. I'm not just looking at them on the last particular day. So things will be on my watch list for a few days because I'll be filtering for them as they're setting up, not just after they've set up. So this is a case in point on that one. Lockheed Martin is next. That's going to be interesting. What about defense stocks? How about that? That one's just broken out today. Again, it consolidated above that 200. Again, good OVI as it pops above, and it's now popped above that little slightly messy consolidation there. I just wanted to show you, the actual, just the theme of what we do. Lowe's is next. I should have showed you this with Home Depot, and let me just find that today. Let's just go and pick it up.
Do you see? So the bar on 515 for Lowe's. I want you to know that there is a Lowe's right down the street from me. That's my bar right there. That's my honey-do list.
And by the way, that is a momentum initiator bar right before earnings. It popped up really pretty much very soon after that. And look at the consolidation. You also knew, there's also a concept called clustering. And clustering, if you've been following Home Depot and Lowe's pops up in your filters as well, which it did for me, I'm going, well, these guys are kind of like, Jack and Jill. They're going to go together. And Lowe's has obviously done that, and it consolidated nicely after earnings and then popped above a little consolidation on May the 26th. Obviously, it's off a bit yesterday, but back up a little bit today, but enough to bag a first profit. So one of the parts of our trading plan is to not allow a profit to turn into a loss, not allow a decent profit. This has already made a decent profit. It's a few percent. Okay, a few percent is still good. In a couple of days, think about that extrapolated. That's amazing. Okay, Mastercard is next, MA. And Mastercard is just a leading stock. So you never want to have Mastercard off your watch lists, okay? It's a leading stock, and it has performed amazingly well. It's up again today. We were looking at it yesterday as a consolidating situation above that 200. I still think there are slightly better ones out there than this. It's a high-price stock as well. But again, just goes to prove the point of what we look for and what's happening. Monster is next. Now, this really is an amazing company. So much achievement and so much more potential. So Monster gapped up at earnings above the 200, consolidated, and as it consolidated, the OVI got to work, and that's then it then broke up again on the 18th, 19th, and 20th of May. Big volume bar on May the 15th, again above that 200, gapping up at earnings. It's got all the markers of money pouring into that stock and a relatively low entry point after that first consolidation after earnings. So that's the kind of thing that we really like to see. Again, looking for the big money to go into stocks. The next one is MXIM, that's Maxim Integrated Systems. Well, integrated products rather, sorry. Again, another technology stock. You'll find a lot of them are tech stocks. And again, what we saw is a consolidation right above that 200. Lots of good blue OVI. Look at it. And then pop, off she goes. Pretty nice. Are you getting bored of this? Are you getting the message?
I'm excited. If anyone in the audience right now is bored, they don't belong here.
I mean, really, you know, think about it. Think how good you could get at this. Just doing the one thing over and over again, up or down. Now, NEWR is New Relic Inc. And this one was beautiful. It popped up with big volume at earnings. It gapped up above that 200. It did make a little rise, potentially enough to bag a little bit of profit, but it's off a bit right now. But right now, what I suspect it's doing on really not very much volume, you know, still below its 20-day volume average. It's potentially consolidating again. So that's just an interesting one to bear in mind. That might be consolidating right now. Next one I want to go through is Nike. Nike is consolidating as we speak. It's just come out of another consolidation. It again has popped up through that 200. It consolidated. It popped up again. Earnings on the 25th of June. It's looking interesting. Next one is OI, which is OI Glass. So OI has just popped through in the last 2 days. Now we want the consolidation. Okay, so that's one to keep an eye on. Good OVI. That's one to keep an eye on. Let it see if you can consolidate over the next week or two, or less. Next one is Palo Alto Networks, PANW. Like this stock, it needs a little bit of work. It's done a momentum shift bar today, and we'll just see how that consolidates over the next little while. So just keep an eye on that one. Pinterest came in today. Pinterest was one that I didn't cover yesterday, but it was in today. It's in today because it's just poking through that 200. The OVI has been really good. It's actually forming an inverse head and shoulders. That is also a good sign. Lots of OVI. Monitor it, see if it can consolidate to give you a low risk entry. Next one is PKG, Packaging Corp of America. Again, slamming through that 200. Good OVI as it did it. One consolidation in the bag. It's gapped up today. Off she goes. And now we need another consolidation to get in. Next one is PKI, which is PerkinElmer. I think that's the way you pronounce it. PerkinElmer. Took me ages to figure this one, but this is the. I just want you to look at this, because this is everything you want in a stock, except for the fact it's already gone. But go back a few weeks, because I actually put this on Twitter and Facebook just to show people this is what we look for. Now, the OVI starts to go a little crazy on it at the end of April, okay? As it penetrates that 200-day moving average, it then forms one consolidation and then gaps up at earnings. That's the gap up there. You got it? That's it. And then consolidates again. This consolidation here, post-earnings, with a rock and roll OVI above that 200, with volume spikes also happening before the breakout. So they're happening on May the 15th and 18th. This is money pouring into a stock. It doesn't get better than this. Just take a screenshot of this. Put a poster up. This is what you're looking for. OVI, thick blue. Post-earnings gap up above the 200. Consolidating. Volume shrinks on the consolidation. And then boom, up she goes. This is so good. So good. And it's up again today. So this is a poster child for good trading. Okay, and we can find these. You can find these before they pop. You look like you're about to ask. You look like you're winding up to ask me a question.
I am.
I can read that body language.
Okay. Well, you said you can find these, and that is a perfect segue into a question that we had in our YouTube comments. The question is, how do you screen for these stocks with the OVI software? One of two ways. One is with MetaStock. in the exploration tool, we have 2 scans within Metastock if you have the OVI add-on. In the second way is you can actually look for these opportunities in the OVI Private Traders Club, which has quite a few screening tools. And Guy can tell you a little bit more about that.
Absolutely, and the flag trader, things. We look. This is exactly what I look for. If Hunter sort of loiters around that consolidation above the 200 post earnings, this is where I hang out, guys. If you wanna catch me on a Friday night, that's where I'll be, loitering around there. It's just such a great place to go. And by the way, go back, just on the chart there, just drag your mouse back. No, it's okay. You don't need to drag. Yeah, just the mouse. Just look at what happened on the way down. Okay, so at the end of February, it penetrates the 200, consolidates rather messily, as they often do, but look where the OVI is at the time. Look at it. It's the other way. It gives you a shot on the way down as well. So again, we don't have to look very far for these things. All you have to do is look for this stuff. By the way, I just want to say actually as well that the Metastock crowd are the best. You have the best people because you've got real traders. You've got proper people who think. Now, maybe a tiny observation is that sometimes, because we're thinkers, we might overthink things sometimes as well. I would suspect that if you wanted to take a dope chart of who are the overthinkers in the market, there might include Metastock traders. And the ones that I've met are just great fun people. And boy, they put me to work. And when we do our events, they come up with these wild option strategies they want me to test and to try, and we have a lot of fun with them. But I love it because it gets us thinking. But with all that, don't overanalyze, guys. Just again, think about what you're looking to achieve, and what if we covered this last night, but we've only got a few stocks left. But let me just sort of go into this a little bit. What moves a stock price is money. And what we're looking to find is not just any old money, is educated money. It's informed money, maybe even insider money. What you're seeing with OVI is a lot of insider stuff. So you better hope that the authorities don't get onto it, right? Now, it might not be dodgy insider. It might just be great analysis. It might just be industry people going, oh, look, this company's buying more widgets. That's interesting. Those kind of things. So just because it's sort of somewhat hidden doesn't mean it's dodgy. And even if it is, we're not the dodgy ones anyway. We're just following what money flow is doing. So if you can think about that and go, yeah, that if it makes sense to you, then this is a great way to do stuff. And it's just so good that that Metastock are basically we kind of pursued each other, as it were. But it was great. Let's take the next one. Planet Fitness is next. I have some stories about Planet Fitness. I have a very, very smart member, and he's just got it in for Planet Fitness, and he just hates it, And we had years of thick blue OVI for Planet Fitness with an uptrend. He shorted it at 30. He was way in the hole when it went to 80. Obviously, he was delighted when it went down from here. When you look at February, it went all the way back down to there. But he'd been so in the hole. But he's not trading what he sees. He's trading his opinion. And look what's happened to it. It's almost back to where it was. Okay? So again, trade what you see on this one. This one, I was hoping it would consolidate for a bar, but it didn't. It's kind of done something funky today. So I think I'll leave that one alone for now. It's not giving me an easy, low-risk entry point on that one. The next one is PNR, which is Pent Air Incorporated, which is an industrial kind of thing. Maybe makes air conditioners. I'm just guessing. And if you look at it. Just look at that. Gaps into that 200-day, consolidates above the 200-day, and pops up above that. Pretty good, huh? I mean, that's pretty nice, isn't it? So again, something we saw yesterday, doing nice. Just a few more to go. Hopefully I'm not going on too long here. Am I going on too long?
No, we're fine. We got
just not much left.
We're good to go.
Say again?
I said we're good to go.
Okay, RDFN, look at that. Just enjoy what you get there. I mean, look at it. Gap up at earnings. So the earnings was on the 7th of May. OVI starts to kick in there. You have this nice consolidation, through the 11th to the 15th of May, and then it pops up on the 18th of May, and then does another flag literally just in the last few days and pops up from there as well. All with good OVI, all above that 200-day recent penetration. Pretty nice. RDFN, that's Redfin Corporation. Roper Technologies, been an old friend of Roper's for some time. And again, just look at the behavior. Again, pops up above that 200. And the second consolidation suddenly takes the OVI with it. And then we've done pretty well since then. No need to talk too much about it, but look at the OVI swinging into action there. Nice stuff. Good volume as well. Tractor Supply, Tsco, is next. Been onto this since the beginning. Since that first flag. This again is a poster child. So look at earnings on April the 23rd. It has a high volume bar on that day. Okay, so that's when it pops through the 200. There's your big green volume bar as well. OVI has already been kicking into action, consolidates into the beginning of May, and off it goes. And consolidating again now. So again, another poster child, a bit like PerkinElmer. ULTA, I don't think I mentioned that one yesterday. Let's just see what's happening to that today. Came in one of the scans. It's just consolidated, there's retail sort of cosmetics, this just consolidating above that 200-day moving average. Just came up. VIAC. This is Viacom CBS. And with this one, the OVI has been in action since near the beginning of April, and it's just looking better and better and better, and it's looking really strong. So although it's below the 200, there's some really interesting activity looking like it's going on there.
That's
so
for us. So let's go to VMware.
Okay, VMware. That was today. So VMW. That's a new one today.
Mm-hmm.
And I don't think I mentioned this yesterday. I didn't mention this yesterday. So this one's looking, it's popped up at earnings. It's gone and almost touched that 200. Just keep it on that watch list. See if it starts to get some traction there. Big volume bar there at the end of the month, May the 29th. It's got a chance. It's got to be on the radar. Workday. I'm hoping for big things on this one. Again, it's got all the hallmarks. Hasn't gone yet, but today we have a potential momentum initiator bar. So, as I call it. So, be aware. That was consolidating for what? 6 days, 5 days after the pop-up at earnings. Look at the big volume bar. Look at the OVI ramping into earnings above that 200, and today it's come back in a good way. I'd like to see what happens at the end of the day with today's volume. Today's volume might not be that spectacular, but that's setting up right now. And just two more. XPO is next. It's XPO Logistics. That was on our list yesterday, and it's slightly popping up today. But you can see the same kind of thing here. And you go, wow, if I could just find all these, wouldn't life be great? And then Zoetis, ZTS or ZTS is the last one. And that one is consolidating as we speak. We've already been onto this for some time. We've already taken that first consolidation. Now it's just literally, will it give us some more? Will it then really fulfill its potential for some more? And that's it. So, all I wanted to show you today is potentially how to get good at one thing, where there's really good reasons to get good at it. And we're not just looking at patterns and squiggles on a chart. We're looking at real behavior of real money, leverage money, money at risk, big money. And we're looking to see if we can catch a ride on that. And that's pretty much it from me.
So let's get to a few questions. in the audience, we went a little bit longer today, but I mean, we went through 50 some odd stocks, 53 stocks or whatnot, and took a lot of did a lot of analysis on those. So I'm glad you guys hung around for this. A couple of questions. Why do you need the consolidation with this software?
Okay, well, it's with the strategy actually. So why you need the consolidations for a couple of reasons. For a start, I like to see it where a consolidation gives you a low risk entry point and where you can wrap a trading plan around it. It's not enough, at least in the discretionary world, it's not enough to just have odds on your side. You've got to have a low risk entry point and an ability to manage your trade. So that means entry on a breakout, because when a stock breaks out, it's proving to you that it's going through resistance. I'll come on to that in a minute. Also a place to put a stop underneath that consolidation area potentially, and then a way to actually manage your profits. And we have that in a couple of stages, which I won't go into right now, but managing your profits is critical. So you must make sure, firstly, that that a decent profit does not turn into a loss. And the second thing you must make sure of is that if it is going to go on a trend, that you have a mechanism that allows you to actually be on that trend. But there's another reason for a consolidation that's very valuable to you as a trader, and that is this. When you get a consolidation of price, as in price going sideways, maybe the volume, the actual the range of the bars also constricting, if you also get with that a contraction of volume as well, what it shows you, at least in a bullish situation, it shows you that there may not be any sellers left. And the next big push, if it occurs, unimpeded, going through resistance, may be doing so with lots of buying strength and no selling resistance against it, which means the price will rise and keep rising. And you've seen that happening over and over again. But that's why consolidation is very valuable. One, to wrap around your trading plan, but also behind the scenes, the behavior is sellers have dried up. Now, you don't get in before the consolidation is then broken out of, because you don't know whether it's buyers and selling drying up. But obviously, if it breaks out of that consolidation, you can pretty much surmise that while sellers have dried up, at least then the price action is showing you that the buyers have turned up again to push that price through the resistance. That's why consolidation is very valuable, both from a behavioral point of view, but a trading plan point of view as well.
I've kind of always thought of consolidation but before you make a decision, you always stop. Well, preferably, you always kind of stop and think about it a little bit. And that's kind of what the stock is doing here. Is it's stopping to think and make a decision which way it's going to go. So consolidation does really give you that unique buying opportunity where you're watching the market think about what this stock is worth to people and who is buying and who is selling, and then you make that move outside of it.
Also, when it comes to big investors and big buyers, they've got funds to allocate. They've got things to do, decisions to make. And so it doesn't all happen at once. It happens in stages. And that's just one of the stages where they're getting ready for the next push. If the push doesn't happen, you didn't get in anyway. You didn't lose anything. But if the push does happen through the resistance, then you're in.
Next question, with the $97, do you get both the Metastock software and the membership to OVI? Just to kind of cover this with everyone, Metastock is separate. If you own Metastock, if you have Metastock currently, you only pay the $97. You get access to the OVI as well as the OVI Private Trader Club. If you don't have Metastock, you'll need to take a trial of it at least to do that. And we have people you can contact right now. If you go to metastock.com/sales chat, those guys can answer all your questions about Metastock. Another very good question by Bobby B. Good. I like your name. That's a good name. Does it work for futures or Forex?
Works for stocks and options.
Works for stocks. Works for stocks. Anything that's optionable, U.S. optional.
And of course, one of the things we do is we can trade the stock or the options on that stock.
That's an interesting point. If you weren't with us last night, we kind of covered this, that this isn't something where you have to be an options trader to use this exact system. You can just trade the base equity, but you're looking at where the volume, the majority of that volume is coming from is through options traders.
Yeah, you're looking at the intelligence of options traders, and options being a reasonably sophisticated instrument, especially when it comes to big volume. You are the empirical analysis bears this out, but the presupposition here, the hypothesis, is that you are observing more intelligent action than ourselves. And that's what you want. I mean, if you want to get better at something, don't play with someone who's worse than you. Play with people who are better than you. It's a simple thing.
Next question by Paul. Aren't these consolidations the same as Bollinger Band squeeze situations?
Well, it depends on what you want to talk about. I mean, I have a particular visual for consolidations that doesn't require me to use more lines on the chart. So, again, I like to keep the derivatives of my analysis to the minimum. So for me, the Bollinger Bands doesn't really do much for me, but that's okay if you want to use them. That's totally cool by me.
Yeah, and this is something where you're not locked into this system. You may add other indicators.
Yes, you can definitely add whatever you like.
My preference here is to keep it really, really simple. The old KISS methodology, keep it simple, stupid. But if your idea of consolidation is, if the way that you look at consolidation is through Bollinger Band squeezes, you can use Bollinger Bands
you can
on
use
this
Keltner
chart.
bands, and you can do all sorts.
Yeah, exactly.
I've never found I needed it, but that's okay. Look, I've played with virtually everything, because I'm a scholar in that way. But I would rather keep my analysis on a chart as close to the behavioral reality as possible. So I'm now thinking in terms of, can I see an institutional or large aggressive investor footprint here? And the more squiggles I have, the further away I get from that.
That's true. When I first started at Metastock 6-7 years ago, whenever it was, I started trading. It was, I'd watch all these different webinars, and I'd have just a ton of indicators on my chart, and overbought, oversold, and 3 or 4 moving averages, and stochastics, and Bollinger Bands, etc.
And 7 indicators under the chart as well.
Yeah, exactly. And it's support and resistance lines drawn, etc. It was too much, and I found myself worrying about too many different aspects of it in an industry where there's already unlimited variables. So, if you're keeping your chart simple, it's easier to, like Guy says, to become very good at one thing. Very good at reading this indicator and this moving average with volume.
Yeah, you just got to pick your poison, really. This is, and there's lots of choice, and there's some good stuff out there. I mean, I'm not here to denigrate other things. But I know that my background is very academic. It's very mathematical, and behind every piece of math, there must be, if at least in the world that I've inhabited, there must be an explanation for it. Because if it's, I will kind of veer into something here very briefly. But if you think that the markets are run by some sort of magical number system, divinely given, or some other bits, I think then you're getting a little far away from the down-to-earth realities of money in and money out of the markets. And I would urge you to shy away from a sort of conspiracy theory kind of market approach.
Keep it simple.
Yeah, and keep it real as well. Keep it simple, keep it real. Can you legitimately explain the chart in a behavioral way? Because if you can't, and can you minimize that risk as well? Because if you can't, that's not a chart, that's not a stock that's worth trading.
Couldn't agree more. It looks like we are out of questions. It looks like you're out of wine. It looks like my hair is starting to fall apart a little bit, so I think we're about wrapping up on the time.
Your hair looks great, I gotta be honest. I only wish I had hair like that. And look at listen, because I haven't had a haircut in like 5 years now. I'm having to put Vaseline in my head. So I just want to make sure everyone knows my head is not normally this greasy.
You look dapper.
Yeah. Now you're sending me back to my my kids for the weekend.
Yeah. Well, we've had our special time this Friday evening. Had a little bit of wine, talked a little. Yeah, and talked a little stocks, talked a little business. So, tell the wonderful people out there in the audience right now how to get a hold of you if they have other questions about OVI.
Oh, if you have other questions, go to just write an email to support@ovitraders.com, and we will take care of you. It might take a day or so, depending on weekends. I do let my team have a break, so sometimes we get people on a Monday going, I sent an email, I'm waiting for 3 days on this. I go, but you sent it on Friday, it's now Monday. You give them a chance, We take, like Metastock, I take support very seriously. We're known for it. You don't get it always perfectly right. Sometimes an email goes into spam or whatever, but we are on top of these things. Just write to support@ovitraders.com and we'll be on to you. We'll be there to help you and attend to your requirements. What I have found, I just want to emphasize again, is that Metastock people are right up there in terms of just trading intelligence. And I love you guys. So if you guys want to extend your research to the dark side, we're delighted to have you.
Yeah, and I encourage you out in the audience, if you didn't see last night's webinar, it was pretty darn good. We put the link to it up in the chat in YouTube. It's at the top. I'm sure it'll appear here momentarily again in the chat. We also offer a trial to OVI special, or rather a special price to OVI. That link's in the description. Let us know if you have any questions, either party, Metastock or OVI. We're always happy to help. So,
and actually, last night's webinar, Hunter, they'll give you some more practice. You'll see a lot of the same stocks. You'll see them from the day before's perspective and why they were there, and they popped today. But it was unusual because it was really something to showcase OVI Private. But actually, what we did instead was to say, look, let's just go through some stocks. It's the best way to show you what we're all about. And so we kind of freewheeled it, and then we had some fun.
Yeah, it's a good time. We got to see a little bit about your website and the private club, etc. So that was amazing, guys. Check out that webinar. It did, in fact, magically appear back in the YouTube comments. So,
well, good.
Guy, thank you so much for being with us this evening. Once again, congratulations. Have a wonderful weekend.
Thank you, guys. Appreciate it. Always a pleasure. Hunter, we'll speak soon. Say hello to the gang from me.
Will do.
Bye.
Cheers.